Welcome to another session where I trade the Nasdaq 100 futures live. I'm happy you tuned in and look forward to making this a profitable afternoon. All right, guys, it's a new day in the market. Fed Speak Day, January 26, 2022, and you are tuned into our live stream. We are happy to have you here. And today is going to be a very interesting day come 2:30 Eastern Time when the Fed speaks. The announcement comes out at 2 p.m. So stay tuned for that, something very important. And we'll be broadcasting all the way through 3:30 this afternoon. Just going to get set up real quick and we'll get started in just a moment. All right. Hey, Ansel, good morning to you, or good afternoon, or good evening. It might be evening where you're at right now in your time zone. Glad to have you back. We're going to get started shortly right now to see where the market is shaking out right now. So, Nasdaq 100 futures and boom, boom. Let's take a look at the COT report. I always like starting my day by looking at that. And evening, okay. It's evening time out there. Awesome. 1:30. Wow, 1:30 in the morning. That's incredible. All right, well, I'm glad you're up. Let's take a dive into the COT report here. We are still trading in this range of 410 to 706. This little reversal right here to the upside was perfectly caught when the filter crossed right here. Crossed yesterday right here, last night after the market closed, and sure enough, this little pullback was to be expected with that. The strategy has not yet closed out the trade. This strategy has been in here since late December, so it's still on the short side. The COT report comes out in 2 days right now. It seems really flat, as if institutional or speculators are not pouring money back into the Nasdaq. There could be a lot of bounce and consolidation right around this point right here until we see a breakthrough of the 706 level. We're going to have some interesting times. So this is still way down here as well, so unless it crosses, then we're not really going to have a significant reversal to the upside. That's my opinion based on what I know and what I've traded here on the daily. Okay, so let's go ahead and view it, the overnight. We had lower than average volume in the overnight session. Yeah, lower than average volume is common because we're going to make, the Fed is speaking today, so I think a lot of people were on the sidelines to wait and see what the Fed is going to say. So no signal whatsoever was produced by the overnight algo right here. None. Zero. No signal whatsoever right there. As far as the 3 live algos right here, this fired off a buy at around 11 a.m. This also fired off a buy at 11. This has been on the upside since 11 as well. So they're all in unison. This just fired off a sell signal right here. Look at that. You're seeing it right there. Sell signal. boom, to that one. Let's see. Cool. Yeah. So you kind of bought within this bar right here, this 14, 3, 311, 3 and change right here. So you're in at this bar, which is fantastic. Yeah, this is the bar you wanted to get in on that long position right there. The other algos that I've got here had a short signal on this one that was probably a little bit premature. Got a long signal here, which is still going strong. Got a short signal here, which was a little bit premature. And same thing right here, a little bit premature on that. So we're going to be coming back and referencing this in a little bit. Let's look at the 5 minute. Wow, the 5 minute is way up here already. Generally, when it gets to this red line, there's always some type of reversal in the 5 minute from what I have seen in the past. So given that this already closed out right here, and this will be closing when it crosses down, and we're still open on this one. Okay guys, if you're just joining in, thank you for joining the group. We're here again trading the Nasdaq 100 futures live, and we're waiting for the Fed to speak at 2 p.m. today. Well, 2 p.m. is when the policy announcement gets published, and 2:30 is when he actually speaks. So just be very cautious, guys. The market tends to overreact or sometimes move really volatile in an irrational fashion when the Fed speaks. So just be careful today if you're in a trade right around the 2 to 2:30 time frame this afternoon. All right. Wow, this thing just cut up right here, so okay, I'm gonna keep it on this screen right here, just simply so you guys can see where this is trading. This filter has actually picked up the trade super nice, and there it goes. Until you actually get a crossing from here, you know, this thing's just gonna continue going. So there you are, boys and girls. That's what we've got right there for today. Yep, couple of hours for the Fed. If you guys are just tuning in, if this is your first time tuning into the group, I strongly suggest that you watch the replay of yesterday's session. Okay, yesterday was a fantastic session that highlighted the performance of these three algos plus the others that I've got on this page right here. Go ahead and watch the replay if you haven't done so already, and if this is your first time here in the group. If this is your first time, thank you for joining. Please hit the like and subscribe button so that you can be notified whenever I come on live. That's the only way you're gonna get notified, if you like and subscribe to the channel. Now, if you're not into futures trading, you're in the wrong channel. But if you are into trading the Nasdaq 100 specifically, you're in the right spot. This is all I do. This is the only symbol I trade on a daily basis, Monday through Friday, 12:30 Eastern to 3:30 in the afternoon. So I'm going to be extremely cautious. I'll just put that out now as far as the trades that are taken, only because I've seen it happen before where there's a lot of whipsaw when the Fed speaks. So guys, if you're new to this, you're going to have to just be very cautious, and I would suggest you stay on the sidelines today as the Fed speaks. Ranger Trader, thanks. It means a lot to me. Thanks very much. I appreciate your support, and welcome to the group. So for you guys who are just new to the group, I'll just do a quick overview because some of you guys jumped in the live stream just a few minutes late, but it's 12:40, so I can go ahead and do this because I got 5 more minutes for bar change here. So anyway, we start with the daily here, and what we're looking at is that the Nasdaq right now is kind of range bound between the 410 and 706 level right here. This has been extremely accurate, guys. For you guys who have been watching me for the last week and a half, you've seen it break down several different levels of support. And the strategy I have here picked up this short way back in December. So it's been writing it down all the way through. It's been extremely accurate. We're not going to see any action in the Nasdaq until we actually see a breakout of this longer term filter that I've got here, which has also been extremely accurate in capturing longer term swings. For example, right here, it caught this swing going all the way up right there. You see that? This filter here actually captures the shorter term swings. So as soon as it crossed last night, this was expected to happen right there. This little bounce to the upside. We look at this daily. I post this on the Discord group, and you guys can further analyze it for yourself on the Discord group. We also look at the overnight volatility as well relative to price action. I've got an algo that normally detects when there's going to be a really good bias in the market. Last night it did not detect it, and for that reason you're not seeing anything on the screen other than the price graph right there. We did have a lower than average volume represented by the 5-day volume by this horizontal line right here. We did have lower volume in the overnight, and that's expected on Fed announcement, ahead of the Fed announcement. So we look at this on a daily basis, and this has been also highly accurate when the signals are produced before 8:30 in the morning as to predicting the daily range or bias of where the market is eventually going to trade. So this has been very good. Last night there was no signal whatsoever, so we're skipping over this for today. Range bars, guys. Wow, look at this. As far as the range bars are concerned right there, this thing has been on an upward move since early this morning. It's definitely in a trend. Remember, I told you whenever it breaks out of this range channel here, boom, it just continues trending up right there. And there you go. But as far as the AI driven algos, which are these three right here, you are still in a long position. This position right here, okay, fired off a buy, and that's been going on since, gosh, 11 a.m. This just closed right now at this bar. Normally it closes about a bar or two early, and this is just still ripping to the upside as well right there. So that's where we're at as far as that goes. The other four regular standard algos that I have, this is still long. This fired long, this fired long, and this fired a short a couple of bars early. Now the amplitude on this particular algo is set up differently than these over here to capture very short-term fluctuations in price. Okay. So we're going to look at the AI algos because these are the ones that have been actually capturing these very, very long-term moves in the market. So I'll just go ahead and highlight this one and leave it up. Actually, you know what? I'm going to go back and look at this one here too. Well, this one's not going to change until this yellow bar, this yellow trace crosses the zero line plus 1 bar. Just remember that's how that works right there. Okay. Okay, we just got new bar change right now, guys, and we still don't have an exit signal on this one yet. We had an exit signal on this one right here at this bar, and then this one right here is just ripping to the upside right there. See what's going on with the 5-minute. Wow, look at this. Normally, whenever it goes on top of this line right here, and someone yesterday was telling me about Fibonacci retracement lines and all that. Well, this is a superior version to Fibonacci's that I've got here on my screen. Way eons advanced, miles ahead of Fibonacci or anything that you can think of out there. Normally, when it hits this this red line, there's normally a retracement to the downside. So it just hit that right there, and boom, we'll see if there's a little pullback to the downside right there. So we're going to look at the live algos right here, and I'm just going to leave these here for you guys to look at momentarily. And again, guys, if you're new to the group and you haven't seen these algos in action, these are AI driven algos, these three right here. These two are identically the same. The only difference between them is the session time. They're currently being tested right now, and I'm trying to see which one is more robust session-wise, profit-wise, and I'm going to make my decision probably by the end of or middle of next month on these. Yeah, go ahead and watch yesterday's replay of the session, because that will really show you what shook out yesterday and what it is that we do here at the live stream. Yeah, there's a lot of noise around Ukraine and Russia right now. I think America's policy is really simple. They really just care about securing Ukraine's borders and not ours. That's, in a nutshell, what it boils down to. But remember the confluence, guys, of events we've had this week. We've had like 3 rivers of information that have rocked the market. We have the UK-Russia tensions going on. We have the Fed speaking today, and we have a slew of earnings that are hitting the tape as well. So that mixture of information has caused a lot of uncertainty and instability in the markets, which is just really causing all sorts of havoc. So yesterday, guys, there were a few of you who actually did extraordinarily well in the market, and today is going to be just a little bit of a different day because the Fed is obviously speaking. So I'm taking a lot more of a precautious approach in my trading than I normally would, just simply because I know what happens when the Fed speaks. Also, guys, that I posted a picture of the market instability chart on TradeStation, and that's up on the Discord group if you guys want to see that. The tutorial on how to create that specific chart for your own use. I just need to find the time to do that sometime over the weekend because setting up the overnight session is a little bit complicated, and so I need to actually walk you through it by way of doing a tutorial video so you guys can see how to do it. And I'll see if I can get to it this weekend. And once I do, I'll go ahead and post the instructions on Discord so you guys could create that chart on your own screen. Hey, awesome, range trader. That's good. Yeah, there's a lot of people waiting for 2 p.m. It's going to be interesting to see how that whole thing shakes out. Yeah, Ansel, for sure. You know, if you don't have a stop baked into your strategy, then you obviously probably use a mental stop. You just got to cut your losses and yeah, and also don't revenge trade as well. That's a no-no right there. So guys, I've said this before, unlike other groups out there that use a discretionary method of trading, I do not trade discretionarily. I trade based off my system and the signals fired off by the algos I've got here on the screen, right here and right here, right? So I look at that and I look at a few other different things, and we kind of bounce around from one workspace to another as we determine what we're going to do as far as a trade or anything like that. This chart here is just AI strategy number 3, just blown up for you guys who are new. Just kind of giving you a little bit more detail as to what I'm looking at there. Also, just in the best interest of full disclosure, guys, I am not a licensed financial advisor, and any trades that you choose to take or follow based on what you see on my screen are solely done at your discretion and at your own risk. Okay. I used to be a licensed financial advisor many years ago for 2 very large firms on Wall Street, but now since then I've been practicing and trading for my own account. So just use caution, discretion, and make sure absolutely that you do use a stop loss of some type to manage your risk in any trades you choose to take today.
So guys, I don't have any new signals. The cues are
An
still
inverse,
open there.
an inverse Wyckoff. That's interesting. I've never heard of that expression. I don't even know what that is. Yeah, we encourage you to post a screenshot of your 1 hour on the Discord group and just kind of put what you coined as an inverse Wyckoff, just so we can have a visual of what it is you're looking at.
This is still open here to the upside.
Ah, okay, I see.
And you have those 2 positions open here on the DX, long.
Okay, we got 5 more minutes for bar change, guys.
Excuse me, no, this one is I'm trading just for the short. This is the long, this is the short one, okay? So that is closed. The opening is here on the long.
Let me just take a quick peek here.
And
Nothing
that is
there.
so far it. Nothing else going on. Remember, you have the meeting with the
Fizzling out
Fed
right
at
there.
2 p.m.
Just leave that there for now.
Be very cautious today.
Now, Marcy runs the options desk, and the link to the options desk is on the description box here on YouTube. She's short the Qs. She took that based on a signal she got, I think, yesterday or the day before. And she's hoping the market's going to crater because she bought puts on the Qs. The front month puts. I'd be very, very, very happy if this thing just breaks down this 706 level and continues going down. Before today, hey guys, we're up like 400 points, not bad. I'm also going to post the trading rules. I got an email from someone asking me to post the trading rules on the Discord channel. And I'll be more than happy to do that, just to have them as a point of reference for anybody who's trying to develop their own strategy. They could reference those. But I'll just kind of go over just a couple of my trading rules for some of the guys who are new at the room. One of the things I do is that I do not jump in at the open, no matter how good the signal is or how good it looks. I never jump in at the open, and I do trade the AM session, but it's my practice not to jump in at the open. It's just way too choppy for my taste. I typically wait about 20 minutes before deciding what to do for the trade day. Also, I focus a lot on the process and not on the outcomes, and that's really important in trying to trade. I try not to set expectations with regards to profit either. I don't want to say, hey, you know what, I'm taking this trade for $1,000 50-point move or anything like that, or even a 10-point move. I do not set expectations with regards to profit in anything I do. If you've ever set expectations about anything in life, especially with people, you're going to get very disappointed. And as you know, you've got all type of characters driving the price up and down of all these instruments. So I try not to set expectations with regards to any type of profit-taking points. Also very important, guys, if you're late to the party, for example, if you see this run up this way and you're like, oh man, I missed it, I'm just going to go ahead and get in right here. Hey, you know what? There's a lot of guys that do that. I don't. I think that if you're late to the party, I stay out. I don't want to get in and try to take a puff. That's just not my style of trading. Because a lot of times, guys, for example, you might see someone jump into this bar right here and try to chase it, only to see this bar, perhaps come all the way down right there. And a lot of times what ends up happening, guys, is that last trade you think you need to make you feel fulfilled is that very trade that's going to do you in. So avoid any late trades if possible. And also for Fed Day, guys, don't trade volatility. That's a good way to get chopped up and lose your shirt in this market. We just got a new bar. I got distracted, I'm sorry. For you guys who like to trade discretionarily, boom, there you go. If you've been in this trade right there and saw this little thing right there, this little crossing, that's a good discretionary trader sign to get out of that trade right there. This trade's kind of fizzling out too. Let's see what happened here in the 5-minute. I told you right there, whenever it hits this line right here, which is my improvised version of a Fibonacci, ends up typically rolling back like this right there, and it's about to go into consolidation. Now here's something else. The reason we watch this 5-minute chart a lot is because whenever the candle turns white, the market starts going into consolidation, into the sideways chop zone right there. There you go right there. See, it's starting to go into that zone right there. And the market just kind of consolidates and goes sideways for a while before it decides which way it wants to go again. And this is a very, very good tool to have to avoid getting into areas where you know you're going to get chopped up. So we're going to watch this just for a little bit. Okay, you're watching this chart because we're entering into the consolidation area right now. Right here with this candle. this 5-minute chart has a habit of bouncing around between the low point and the high point throughout the day. Let me just go back a little bit here. If I can scale it right, boom, you see that right there. It's trending sideways. If you guys remember yesterday in the market, this thing was going sideways forever, just a bunch of bars. And you guys who were tuned in, you saw this. Then we caught this trade here, which ended up being a fantastic trade, and we took this all the way up to here. Look what happened. Boom, hit that, and then came all the way down, all the way to here, to the green line. You see that? This setup has a tendency to do that. Hit the top, hit the bottom, or hit the bottom, hit the top, all the time. It's like right here too. Boom, hit the bottom, went up. Oh, here's another one right here. Yeah, you can see it right there. Boom, hit the bottom, raced up, and continued up to the very, very, very top right there. Yeah, it's interesting. Yeah, I saw it. I saw it here on Bloomberg. I saw the headline flash really quick. We have less than 1 hour for the Fed policy, and generally the market gets very slow between now and 2 o'clock. It's gonna be a long hour, I'll tell you that, because the market's gonna move most likely very, very slow. Are you long? Are you short at 14,490? Oh, okay, you're short. Yeah, definitely an area to stay out of right now. You don't want to be in this zone right here at all. Got to be very, very, very careful in that little zone right there. Yeah, I think range trader is short the Nasdaq. And here we go, guys. We're right in the center of consolidation. I can see it on a different screen right above me, but we're right there in that zone. And you guys who have been with me for about a week now know that this is a no trade zone right here. This will chop you up and spit you out, and you will guaranteed lose money. So I'm just going to keep this workspace open until we're completely out of chop zone and figure out which way the market's going to move between now and 2 o'clock. Cool, man. Thanks for sharing that. Very much appreciate it. Interesting. If you notice the bar action, guys, there's hardly any bar action right now. it's it's almost like if the market's not even open, it's just not even moving right now. Very, very, very little movement right there. Typical going into the 2 o'clock hour with the Fed speaking. We're in that quiet hour right now where everything is just going to stay quiet until right around that 2 o'clock hour. Okay, we got bar change coming up in 2 minutes. And we will take a peek at those three algos to see if we get any change in direction on those signals. Yeah, just again, guys, I can't emphasize this enough, and I may sound like a broken record, and please forgive me if I do, but be very careful trading right around that 2 o'clock to 2:30 time frame when the Fed speaks and when he comes out to make his announcement. All right. We just got bar change right now. Let's take a quick peek over here. Nothing's going to happen here. I still do not have a signal right here to exit this long trade. This is out. This here, no signal yet until this crosses the zero line plus 1 bar right there. Got stopped out right here. This was completely premature. Signal here is still on the long side. Got a long signal here, and this just fired off a short signal right there. So we will go back because we're still in consolidation and see and take excuse me take a look at this. I'll keep this on until we get out of consolidation, in case you guys are thinking of taking a trade. Yeah, it is very quiet right now. This is that moment where you just stay on the sidelines. It's really that simple. For you guys who are new to the group, thanks for joining. I know you guys have a lot of options out there when it comes to who to tune into for daily trading. What I think you're going to find in this group is that you're going to find a great group of traders. There are some very experienced traders in the group, and we all support each other, and we're here with one common core mission, and that's to make as much money as we possibly can with the least amount of risk trading the Nasdaq 100 futures.
And we're still looking. Those are the cues. We are still on the short open position there. We have the SPY open position going short still. And we have another one, a Google is still open position to the short side. Not a lot of movements today, so just be patient. And remember that the Fed is talking about 2 o'clock, so be patient.
Cool, man. Thanks. Yeah, we've got a little channel there on that Discord for daily winners, and we definitely support posting P&Ls and all that, because it encourages everybody to do their best to actually fine-tune their strategies for success. And they can also learn, from different traders who have different approaches. I've got one approach, but there are many different approaches to trading the Nasdaq 100. And really, at the end of the day, they're all designed around personal risk tolerance more than anything else. Huh. Funny how that just turned around right there. Still in consolidation zone, guys. Kind of wants to break out to the bottom of the consolidation channel. Not just yet, though. Take a peek at something here. Let's go back here. All right, we got 5 more minutes for bar change. Really quiet afternoon, guys. There's not a lot of movement, as you can tell, and that is very common and typical for Fed announcement days leading up to the announcement. So, good time to grab a bite to eat or a snack if you're hungry, and fine-tune your approach if you are planning to trade on the announcement, which I personally will probably not trade, just simply because I do not trade volatility. Steve's just going sideways. 1, 2, 3, 4, 5, 6 bars already. Okay. The market's up a lot today. Almost 500 points. Oh, no, I was looking at the wrong. I was looking at the price, 14.5, and I got tripped up. That's only up 350 points. That's right. Now sideways is this right here, this chop. You see how it's going sideways right here? It came down, went up a little bit, came down. It's just going sideways. It's oscillating. That's what I mean by sideways, right here. Yeah, that's why I've got this screen up, so that in case you guys are getting angsty, I don't want you guys to get angsty. I want you guys to make sure you pay attention to this, because this is not an area where you want to take a trade. This is a chop zone, sideways trading. It's, you know, it's where you stay on the sidelines and you just wait for this whole thing to shake out. Bar change in about 30 seconds, guys. Let me just flip that back over here. I don't expect any bar change until this thing comes all the way down and passes the crosses the zero line. Boom, there we go. And there's your signal right there. Saw that? Got you out right there. Just blow it up. Boom. The end. All right, so now we got short signals. Still in a long signal on this one right here. Long signal there. Got a short signal there. This one just fired off a long signal right there. Let's take a look at the 5. The 5 is still in consolidation, guys, right there. Look at that. And I'm going to leave that there until we are out of consolidation zone, okay? Because if any of you guys are starting to get angsty right now, I don't want you to take a bad trade. Really, I don't. I am curious to know if any of you guys were previous option traders. And the reason I'm asking is because most future traders were former option traders at some point. So I'm just curious. Cool. How long have you been trading the Nasdaq 100, Ranger Trader? Hey, Sure Fib Analysis, welcome back, man. Glad to have you join the room again. Ah, okay. Well, stay disciplined in your approach. The Nasdaq is one of those instruments that's got a very bipolar personality. It takes a little bit of time to master, but once you develop a strategy around what you do, it is one of the instruments that will make you a whole lot of money. The opposite is true as well. So if you're just getting started, take your time to develop a strategy that works for you on a consistent basis. And that part of it right there does take some time. Sure, Fib analysis. Did you see yesterday's huge winner? Where was it? Right here. So I think on the 100 Fibonacci retracement, I think Lee posted that on the Discord group. This thing just kept breaking up, beyond the 50, beyond the 68, and it just kept rip-roaring to the upside. And when it finally hit that 100% Fibonacci retracement, which this is my own version of a Fibonacci right here that I created, it actually did an about face and went down. I don't know if you saw that on your side, but Lee was kind enough to post screenshots of his trading platform where he saw the reversal right there. And we were all watching this yesterday afternoon when it just hit. He says, yes, it hit the 100. And I'm like, yep, it's probably about right here. But I wanted to compare. And it just about faced and boom, went down. So I'm not sure if you saw that yesterday. I'm just curious to know. On any regular day, guys, I would have taken this signal to the downside. Today, I am being more cautious in my approach to trading just simply because the Fed is speaking in about an hour's time, and the announcement comes out in about 20 minutes or so. You did see it. Okay. I am curious to ask, did you hold your trade all the way to the top to when it hit 100? You know what? I'm sorry, guys. I should have kept this here so you guys could see where this is at in consolidation. Yeah, it was very accurate. Let me just go back here. I'll show you. This was the screen we were on yesterday. So if I back it up a little bit to where the trade happened right there, this is where that line was yesterday right there. Boom, it hit, and this red line right here represents that 100% level on the Fibonacci and it just did an about face and boom, came down. Likewise, and the same thing happened right here. You know, it hit the bottom, rallied all the way to the top. I think it was right there. It's got to scale it because if I move it around, these are different days. And sure enough, it hit and it just went sideways. But that's what that looked like as well, right there. So now we're here. It came up and it hit that red line right there. Look at that. Boom. And it just reversed. That's good, man. Congrats today. That's decent profit for the day. Yeah, you know, that was really interesting to see that standard deviation chart you had. You know, plotting that it was a 2 standard deviation move. Yeah, thanks again for sharing those charts. Those were very insightful. I really wanted to see how they compared, you know, to these lines right here, this green line, this red line right here, and then see how it compared with the Fibonacci. It actually compared really well. Really interesting to see that. You know what? Let me just put this back because we're still in consolidation. The market's been going sideways. 1, 2, 3, 4, 5, 6, 7, about 9 bars already, guys. Which is basically the last 45 minutes, give or take. Oh wow, did it go down 3 standard deviations? Yeah, I saw that sell-off. It was brutal. Brutal. Awful sell-off. 3 standard deviations. Wow. Yeah, that's amazing. Yeah, that was a monster swing yesterday afternoon. Huge, huge swing. All right, we got one more minute for bar change, and I'm not expecting anything to happen in this next cycle right now. But yeah, we've been going sideways. We're still sideways. That's the reason I've got this chart up, just in case you're wondering. It's not because I want to look at everything else. It's just that we're going sideways, and I want you guys to know when we get out of the zone. So we're still in that zone. Boom. Finally caught the short signal on this strategy right here. Pow, right there. So now you've got a short here, you've got a short here. This is still long, it's long, it's got a short here, and it's got a buy signal right there. That is probably going to be a scratch as well. Alright, we'll get back to that in a moment. Look at that, it finally expanded. Beauty, look at that. Hit the line and then came right back down, and it's been going sideways ever since. On any other day, guys, I would absolutely take that short. Today, I am being more cautious because of the Fed's announcement between 2 and 2:30. And for those guys who are just tuning in right now, what you're looking at is a consolidation of the market right now as painted by these white bars. Wow, 177 contracts at 480. Interesting. $250 contracts at 480. Wow, that's huge. That is huge. All right, I hope you guys have Bloomberg TV or whatever news channels you have on so you can hear the Fed announcement. That's going to be in about 10 minutes, give or take. And this is said and done, guys. Very typical action right here, right prior to the Fed announcement. I've seen this time and again in the past. So Nanspens is asking how many trades do I take on any given day. I trade the morning session privately, and I trade the afternoons publicly. So whatever signals my strategy gives me, those are the trades I'll typically take. I don't trade the open. So for example, this trade right here fired off prior to the open. This is a trade I absolutely won't take, just simply because I do not trade at the open. And this trade right here, I did not enter it at that time as well. This is actually the strategy firing off the signals here, simply because the market opened right around here. And it was very, very, very choppy. If you notice what happened here in the market, all the way down. It tanked, went up, and then about face and came down. So this particular morning, I was short for I think it was like these two bars right here, and the result of this trade right here, I think I posted it on TikTok or something, but generally speaking, if the signal fires after 9:30, or if it fired before 9:30, I'll typically stay on the sidelines. If it fires after 9:30, if everything lines up the way I'd like it to, I'll take that trade. So generally on a day, I may take maybe 2, sometimes 3 trades. That's it on any given day. 3 would be a lot. If I take one trade, and that one trade makes me 100, 150 points, yesterday I had a 200 and something point winner, and I'm happy with that. So I try not to trade a lot. Or better said, overtrade. Yeah, if you can see, the algorithm is not going to capture short-term fluctuations in the data structure. So it's not going to give you a 10-point winner or 20-point winner. It's going to give you, 50, 100 points, at a time, and that's what kind of like each one of these represents right here. This right here is it's structured a little bit different. This is designed more around the short amplitude swings in the market, kind of right within the 20 to 50 point range. That's what you're going to get with this algo right here. The same thing with this one right here. Whereas this one right here will give you swings anywhere between 40 and 60 points right here. These algos here will give you swings that are much more aggressive. For example, this fired a what do you call it? This fired a signal right at 13,347, and it got you out at 14,487. So if you do the math on that, you'll know pretty much how much you would have made on that right there. It's definitely more than 100 points. Yeah, I think YouTube will have a feed as to the Fed's announcement soon. So yeah, guys, we only have a few more minutes left. Let me go back to the 5 because we are still in that little consolidation zone right there, okay? Yeah, NAND bends. When I trade, I don't like going for small 10, 20 point winners. I prefer the 50 points and above type of trades. But that, I'll just give you a little color there. That also takes a little bit more discipline, because you pretty much have to have 100% confidence in your strategy and in your process and approach to do something like that. I think most traders will be happy if they made 10 points on any given day. And I'm speaking specific to the Nasdaq 100. Okay, guys, we have 6 more minutes for a Fed announcement. And we are still in consolidation. We're right at that halfway point on the consolidation marker. And see, this is exactly the type of trade, guys, that I caution you guys about right here. You had this bar just coming down. It probably made a lot of traders think, oh yeah, this is going down. It hit the top. This is going to just go all the way down here. And then it does an about face, and it crushes everybody, and everybody starts puking. Then it goes down again. And then it goes sideways. Now it goes up. Yeah, consolidation. Chop fest. This is also a study right here. This paint bar study you're not going to find anywhere else, guys. It took me a long time to develop this, to actually get it right. Because I will admit that I used to get caught in these consolidation value traps right here, just like everybody else does. And out of pure frustration, it led me to develop something like this. So yeah, so this is something you're not going to see anywhere else on YouTube or online. It's only right here. Yeah, that's a great question. Back testing in most cases does not work. And I'll tell you why it doesn't work. It doesn't work because it relies on in-sample data when you backtest. And in-sample data is rarely effective for predicting the future. If you want a really robust strategy, the strategy needs to be walked forward optimized using out-of-sample data. Now, when you do that, you're able to actually predict the settings for the next day. And the strategy actually runs with the previous day's selected settings on a walk-forward basis, and it actually gives you out-of-sample results that are much more predictable and reliable than just running a back test using in-sample data. And that's really, really important to know in the development of a strategy. All right, guys, 2 minutes. Buckle your seatbelts. This is going to be wild. This is right at the 50% mark in the other chart I've got up here as far as consolidation. It's just, there's no direction right now whatsoever. All the strategies I run are walk forward optimized every night, every single evening. After I get done with this trade session, with the trading session, after the market closes, that's one of the things I do. At night, I walk forward optimize every single one of these strategies to make sure that they're fully optimized for robustness. All right, guys, here we go. If you're in a trade, good luck to you. guys will probably hear my Bloomberg in the background. I hope you don't mind.
Is this a chairman on a Greenspan who calls a shot, or is there another process that you glean?
I would lean on that there's another process that I would glean. Look, we've got a situation in the economy that we haven't seen for 40 years. We haven't seen since Carly Ostrowski was playing for the Boston Red Sox.
There we go.
And that is we got inflation. I know when you were a child, not a time. We got inflation, and that is a problem as we move forward from here. And that as we go forward, the playbook might look more like the 60s and 70s than it does over the last 20 years or so.
Somebody knows something. Look, you can see the bar. It's just market's gonna go crazy now.
2008, they forgot that in an inflationary environment, it changes quite a bit.
Trying to perk its way out of that nasty chop zone. Wow.
What's he got to say to get the Ortiz glow?
He's got to say that he's serious about inflation, and he's got to say that if that requires more financial tightening, which is code word for volatile markets, so be it.
So how do you fall well into that? But Jim, this is important. Chicago has some of the highest gasoline prices. You're going to have $5 a gallon for you to put in the H2, Jim Bianco. What does the chairman say today about what President Biden cares about, which is $5 a gallon gas?
I think he's going to try and make...
Wow, you saw that volatility? I hope you guys saw that. Right there. Look at that. Look at that. Amazing. It's barely getting out of consolidation zone right now.
This issue, because it is for the president, and he's been
So guys, just going quickly through the
That's why this news conference
strategies to see if you got any new signals.
That's one view from Jim Bianco. Priya, I know of some people who still believe that this Fed chair believes in the essence of transitory, even though he's trashed the word. What do you make of that?
I think that's right. I don't think they're going to use that word. But if you look at their projections, they have inflation slowing. Our economists have inflation slowing as well. The question is, what happens to wage inflation? How quickly does it slow? How much of a threshold does the Fed have to look through inflation?
So the Qs is still open there to the downside.
Which can allow for them to go gradually, start gradually. And if it doesn't slow, I think they can absolutely accelerate. They can accelerate QT, they can accelerate the pace of hikes. But why tell the market now? I think that would really add a lot more volatility because maybe inflation does decelerate.
Wow, look at that.
Which is why I think the message today is we're going to tighten. We can be gradual, we can be measured in our steps. And if this scenario emerges, we will be ready to be humble and nimble.
Wow, look at that, guys. Look at that.
Humility, that's the word. Being nimble. Right now, I think
that's crazy.
A lot more vol to the market.
You're allowed to make up words when it comes to the Fed.
That's surveillance.
They make up stuff all the time. Jim, just quickly to you, sir. In 2 minutes we get the decision. 30 minutes after that, the news conference. If you had a question for Chairman Powell today, what would it be?
It would be about inflation and why he missed last year. To be fair, everybody did. And does he have any confidence going forward in where he thinks inflation is going to go in 2020 and 2023?
Interesting.
Because that's going to be a big issue as far as whether or not they can be nimble, they can be gradual, or they have to be aggressive. And he's also got two audiences he's got to look at. Wall Street's one audience, and the White House is another audience right now. So does he have confidence in inflation as he moves forward?
Jim Bianco of Bianco Research and Priya Misra of TV, to both of you. And to Michael Gapert in the office over at Barclays, thank you for watching, sir. The chief economist over there. Can we stop talking about 50 basis points, please, sir? The Fed
wow, look at that.
Hikes. It's going to be a surprise of cuts.
Gapers going after Brahmas?
From Mike Gapert.
My word.
Basis points. Are you really trying to start something? Drink
Not
your
expecting the
tea.
change. Not expecting the change in 90 seconds. But of course, this is about how we tee up March.
Oh, yes, and honestly, I think that a lot of people would agree with him. Why are they going to do that? What their motivation be? However, there is a real belief out there that the Fed could stop all asset purchases now and actually begin the runoff in a couple of months. And that, I think, is the biggest question mark because that seems more plausible than setting up a 50 basis point rate hike.
An interesting decision, 60 seconds away. I have to say, I don't think Mike Gaper's going after Bramwell Tom. That's not classy. I don't expect that. I don't expect that from
How
Mike
is he
Gaper.
going after me?
Going into this one, here's the price action, Tom. Let's work through it together. The Nasdaq up by 2.4%, the S&P up by 1.5%. It's to the bond market, TK. I know that's where your focus is. Switch on the board and get there. 2s, 10s, 30s. Let's throw in 5s as well. What are you focused on?
Yeah, I just saw the headline. Fed signals it will start raising rates soon, moving towards ending ultra-easy pandemic support to fight inflation.
87 on WTI, on Brent 89. If we get to the final ball and take a quick look
Yep.
at the US dollar.
I just got the news flash here on my screen.
Again, 96.12.
Yeah, it's strength against humans. It's strength against the euro yet again as people try to get ahead.
Wow.
The Federal Reserve with a shifted tone.
Your Fed decision 10 seconds away. After that, we have a news conference with Chairman Powell that starts in about 30 minutes' time. We'll take that in full on TV and radio. With your Fed decision, we can cross over to Mike McKee.
All right, here we go, guys.
Well, no surprises from the Federal Reserve. No change in interest rates. 0 to 25% remains the range. However, rate increases are coming. Here are the key sentences from the Fed's statement. With inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target range for the federal funds rate. They don't give a date. The committee decided to continue to reduce the monthly pace of its net asset purchases, bringing them to an end in early March. They also released a list of balance sheet principles for reducing the balance sheet when they get around to it, including using the Fed funds rate as their primary tool, reducing the balance sheet after they've begun the rate increases. They will let securities roll off the balance sheet, and they don't mention anything about selling them. They will maintain an efficient size of the balance sheet sufficient to have efficient control of policy. Their longer-run aims, as they have said before, are to hold primarily treasuries. They do not mention what will happen to mortgages, which they would hold for as long as 30 years. And they are prepared to adjust any of the details of that balance sheet principle if economic situations change. Same with their view of the interest rate moves. In terms of the statement, pretty much the same with some few tweaks. They say the economy continues to strengthen, and those parts of the economy most affected by the virus are being affected by the sharp rise in COVID-19 cases recently. Supply and demand imbalances relating to the pandemic are the reason for most of the inflation that we're seeing. The path of the economy continues to depend on the virus, and risks to the economic outlook remain. And the committee is prepared, as I mentioned, to adjust the stance of monetary policy as appropriate. The decision unanimous. Philadelphia's Pat Harker voting as an alternate in place of the Boston Fed president. That seat empty at the moment.
Mike McKee, thank you, sir. Stay close as we work towards that news conference. 28 minutes away. Let's work through this price action just quick.
All right, guys, you saw it, you heard it right there. That's what's happening with the Federal Reserve. You guys heard it. You guys can read about it. Strategies right here. This one is still long. It's been long for a while. This one fired a long right here. This also has a long going in right here. These strategies here, nope, not yet. They had shorts and shorts right here. And there's no signal on this as well. So the only strategies right now that actually caught this Fed move were right here. Boom. This one, and this one right here. And I can blow this bad boy up if you want me to. Right there. There you go. There's your Fed move right there. Beautifully done. Yes, it is. It's actually at the open of the candle. So the signal fires off at the open of the candle. So it's whatever the crossing is at the open, and so it takes it right there, boom, to the upside. like 15 minutes away from now, between now and 2:30. Is that what you're referring to? If there's any news that happens between now and 2:30? The Fed speaking at 2:30 can definitely move the market. And that's one reason why I will not take a trade right now, because I've seen this play out before. You see these bars, they go up, they go down, 100-point move, 150-point move, real simple, real easy, right? And also very risky. No, I have not taken any trades. Not since this morning. No way. I typically stay on the sidelines when the Fed makes its announcements, and I'd like to see the market shake out and wait till Fed Powell speaks at 2:30. Once he speaks at 2:30 and the market has actually shaken out, and the reason why is because Fed Powell could say something within the tone of his speech that market participants may not like. And in that Q&A session that he has, a lot of stuff could happen within that Q&A session that can completely change trajectory in the market. So for me, it's just a little bit too risky, and it falls outside of my risk appetite. And for that reason, I'd rather just stay and watch for right now. Yeah, the strategy has a built-in stop loss. So if for some reason there was bad news that came out in 10 minutes and it went the other way, the strategy would automatically, would take you out on the trade on the stop, and that's it. Look at this real quick. Check this out right here. See, that's what I'm talking about right there, about the risk of taking these Fed trades right there. Boom, it'll go up and it can easily just come back down that fast. Oh, it can easily go down and come up depending on the announcement itself. And between now and 2:30, when the Fed actually speaks at 2:30, he's going to basically discuss his policy announcement, and then he's going to go into a Q&A session. That can move the market as well. The market may not like the tone of what he says, and they may just the market may just go into free fall after that, which is why I highly recommend not to trade during this session time right now. So for example, I just got asked a very good question by Ensel. What happens if, for example, the strategy were to give you a trade like this, right? Were to give you a trade, something like this. It says to buy, right, at the open, and all of a sudden you get bad news and the market flips. Well, if the market flips, then you obviously, the strategy would obviously take you out of the trade when it triggers the stop loss. Okay, that's what would happen. But for me personally, in my own risk parameters, I would prefer not to trade this type of noise, which is exactly what it is. Look, this is nothing but noise, and get caught in this chop zone where I'm going to lose money. I'd rather just stay on the sidelines and watch. But the question brought up by Ensel was a valid question, and it's a good question as well. These three strategies here are short. Well, there's nothing here on this one. And short on this right here as well. And this completely smoothed out the noise. Even though you had a huge run up, the algo knows it's a bunch of noise and it won't take you out of the trade when you get caught in this noise trap right here. So there you go. You know what? Hold on. I wanted to see the 5 minute just to see where it is. Yeah, it's in consolidation again. Consolidation zone. Amazing. Just simply amazing. It popped, did an about face, and came down. That's exactly the reason why I chose not to trade it. There you go, guys. Now remember I said earlier, whenever this ends up hitting the top, there's normally a reversal to the downside and it goes all the way down and it hits this red line right there. Pow. Okay. You know what? Let me take a peek at these range bars. Oh, wow. Look at that. Rescale them right there. Yeah. Market's going to start going sideways again. A lot of noise, guys. Lots of noise. Lots and lots of noise. That's the reason why I do not trade these type of crazy type markets. And so we know what's on this chart. I'm going to go ahead and put it back here just so you guys can see how this all shakes out. So Jay Powell is going to be speaking in about 10 minutes, give or take. And again, guys, this is a period of time where whenever he speaks, the market moves. And so I'm not going to sit here and guess and tell you which direction the market's going to move. But there will be some type of movement. So just keep that in mind. If you just joined the group, thanks so much for joining the group. I know you've got a lot of options out there as to different guys out there streaming, and if you're here, thank you so much. I very much appreciate the support. Make sure to like the live stream and also subscribe, because that's the only way you guys will know when I come back live. And just as a matter of full disclosure, guys, I'm not a licensed financial advisor, so I cannot give you specific advice on what to do for your account. I can only showcase how I trade my own account, with the signals I get based off the algorithms you see on the screen. Okay, I used to be a licensed financial advisor many years ago for a big Wall Street firm. That's where I got my know-how, my experience, and exposure to these markets, and that's what qualifies me to trade what I do now and to do it effectively. So if you guys are just tuning in, we are watching the outcome of the Fed announcement right now and waiting for Jay Powell to come on at 2:30 to speak about his policy decision. Wow, 397. Interesting. Let's see where mine is right here. Interesting. Wow. I have been trading for, I guess this is my 19th year, 20 years, give or take. And that's both professionally and as a private investor. So for almost 2 decades. I think it's 2 decades. I have to go back and look because time goes by so fast. So Lee's got a VWAP of 14,397. And let's see here. These 3 bands are sort of my improvised version of a VWAP right here. This purple line, this yellow line, and this blue line right here. All right, we are coming out of consolidation right now, again. Almost there. It's kind of got its head at the edge where it kind of wants to perk out to the downside. I'm talking about this bar right here. Oh yeah, this has got more, definitely way more downside to go right here. All right, I'll just put it back here so you guys can see where it's at in consolidation. Yeah, it's huge and nasty. This is exactly the reason I was telling you guys, don't jump into any trades when that Fed announcement, because it gives you this head fake. oh yeah, it's going to go up 100 points, 120, 150, and then it about faces and boom, crushes you, takes away your profit, takes away everything, and starts going sideways. Again, right there. Sideways trading again, guys, right there. Look at that. More noise. I've been burned before on Fed days in the past, so I've made it a point not to go into trades during these, at least during this time when the Fed speaks, between the announcement 2:30 and during his whole press conference. It's trying to break out of that consolidation zone right now with this bar, but it's barely peeking its head above the threshold right now. I wouldn't trust it unless I get another bar in about 4 more minutes and you are completely clear out of consolidation for this reversal right here. But even then, that's just only saying you're out of consolidation. That doesn't mean it's not going to do this number on you again, right? After Fed chair starts to speak. I see we've got some new people joining today. Guys, thanks so much for joining the group, for watching. Please do like and subscribe to the channel, as that's the only way you're going to find out whenever I come live. Also, what we're looking at right now, and I just finished explaining this chart right here, captures consolidation very, very, very effectively. If you notice right here, guys, it just went sideways until the Fed announcement, then it popped, then it came right back down, went into consolidation again, and now it's trying to perk its head up. This is a very meaningful chart. It's frankly indispensable if you're going to be trading the Nasdaq 100 futures. The news announcement right now gave an indication of what the Fed would do. So what Jay Powell is going to do now, he's going to expand on the small bullet points that he gave to the news networks, and he's just going to read his policy statement, which is pretty straightforward. And once he's done with that, he's going to open it up for Q&A. And so a lot of participants, or market participants, are going to listen to Jay Powell very, very, very closely. They're going to listen for hints and anything that might happen moving forward concerning rate hikes, the timing of those hikes, how much, and then he's going to get a lot of pointed questions in the Q&A thereafter. So that tends to move the market all the time, and you're going to see some action hopefully following his news conference. So stay tuned for that in a couple minutes. So we are almost out of this consolidation zone right now. In about 1 more minute, we're going to get another bar to the upside. Boom, there you go. We're out of consolidation completely. Buy signal still holding there. Still have a buy here that's been long for absolutely ever. Got stopped out of that one right there. And let's see, what else do we have? Ah, got a buy signal right here on this one right now. And you are here still with a short signal there. Just go back to that 5-minute, guys, because this is just, it's capturing a lot of really good detail. All right, it's 2:30. Fed Chair Powell should be coming on any moment now. And if you guys aren't tuned in, I definitely suggest you guys go on YouTube or Bloomberg or some other news channel and listen to Fed Chair Powell speak. He should be speaking any moment now, any minute. Okay, guys, I'm just waiting for Fed Chair Powell to begin speaking, so there's not a lot I'm going to say right now until this guy starts yapping away. If you want to learn NANS bends, definitely tune into the chairman, the Federal Reserve Chairman, who is about to speak or just started to speak right now. I don't know why Bloomberg doesn't have it on my screen, but look him up, Fed Chair Powell on Google or YouTube, and watch him speak, because he's got a lot of good stuff to say, or a lot of interesting things that market participants are looking to hear right now. And that's going to be, should have started already. And here we go, guys. Classic head fake right here. Look at that. Boom. Pow. Right back into consolidation. This is to get your teeth kicked in. And I'm sure a lot of traders took this with a lot of optimism, and now they're vomiting right here. Look at that. That's what you call nasty. And that's the reason I'm not trading this right now. Back into consolidation zone. Look at that. Amazing how that works, right? If you guys haven't seen the action from yesterday's trading, I highly encourage you to replay yesterday's video for yesterday's live session. It was a fantastic day. It was a normal day, and it showed the full potential of what the algos could do. So if anyone hasn't watched it, definitely go back and watch that video from yesterday. Oh, here he comes. He was right in the background. Let me put him on.
This rate would soon be appropriate. The committee also agreed to continue reducing its net asset purchases on the schedule we announced in December, bringing them to an end in early March. As I will explain, against a backdrop of elevated inflation and a strong labor market, our policy has been adapting to the evolving economic environment, and it will continue to do so. Economic activity expanded at a robust pace last year, reflecting progress on vaccinations and the reopening of the economy. Fiscal and monetary policy support and the healthy financial positions of households and businesses. Indeed, the economy has shown great strength and resilience in the face of the ongoing pandemic. The recent sharp rise in COVID cases associated with the Omicron variant will surely weigh on economic growth this quarter. High-frequency indicators point to reduced spending in COVID-sensitive sectors, such as travel and restaurants. And activity more broadly may also be affected as many workers are unable to report for work because of illness, quarantines, or caregiving needs. Fortunately, health experts are finding that the Omicron variant has not been as virulent as previous strains of the virus, and they expect that cases will drop off rapidly. If the wave passes quickly, the economic effects should as well, and we would see a return to strong growth. That said, the implications for the economy remain uncertain, and we have not lost sight of the fact that for many afflicted individuals and families, and for the healthcare workers on the front lines, the virus continues to cause great hardship. The labor market has made remarkable progress, and by many measures is very strong. Job gains have been solid in recent months, averaging 365,000 per month over the past 3 months. Over the past year, payroll employment has risen by 6.4 million jobs. The unemployment rate has declined sharply, falling 2 percentage points over the past 6 months, to reach 3.9% in December. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand remains historically strong. With constraints on labor supply, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. While labor force participation has edged up, it remains subdued, in part reflecting the aging of the population and retirements. In addition, some who would otherwise be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. The current wave of the virus may well prolong these effects. Over time, there are good reasons to expect some further improvements in participation and employment. Inflation remains well above our longer-run goal of 2%. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. In addition, we believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan announced in December to end asset purchases in early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal, the economy no longer needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate. Of course, the economic outlook remains highly uncertain. Making appropriate monetary policy in this environment requires humility, recognizing that the economy evolves in unexpected ways. We'll need to be nimble so that we can respond to the full range of plausible outcomes. With this in mind, we will remain attentive to risks, including the risk that high inflation is more persistent than expected, and are prepared to respond as appropriate to achieve our goals. To provide greater clarity about our approach for reducing the size of the Federal Reserve's balance sheet, today the committee issued a set of principles that will provide a foundation for our future decisions. These high-level principles clarify that the federal funds rate is our primary means of adjusting monetary policy, and that reducing our balance sheet will occur after the process of raising interest rates has begun. Reductions will occur over time in a predictable manner, primarily through adjustments to reinvestments, so that securities roll off our balance sheet. Over time, we intend to hold securities in the amounts needed for our ample reserves operating framework. And in the longer run, we envision holding primarily Treasury securities. Our decisions to reduce our balance sheet will be guided by our maximum employment and price stability goals. In that regard, we will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet, and we will discuss these matters in upcoming meetings and provide additional information at the appropriate time. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Okay, guys, you just heard Fed Chair Powell speak, and now he's going to go into that Q&A session. The market just went back into consolidation. If you guys are watching, this is the absolute worst place you can be as a trader right now, trying to get in or out and trying to make heads or tails of what's going on. This is where a lot of inexperienced traders lose a lot of money. Many people blow up their accounts, and this is just not where you want to be. This is the whole reason why I've got this workspace open here, so you guys can actually see the detail in full action, and also where it's going into. It's going in and out of consolidation, in, out. Look at that right there. That's just chop volatility at its best. Any smart trader takes the sideline. You wait for this whole thing to shake out and for the markets to stabilize before you actually decide to place a trade, long, short, whatever. Right now, for that reason, I am not trading the Nasdaq. I am watching this whole thing play out. He just started to take questions right now. I muted it, and but I can see the headlines. But he's going to start taking a bunch of questions between now and the next 15-20 minutes, and that's certainly going to have some impact on the market. So for now, guys, my my stance on this is I am on the sidelines watching this whole thing play out. Look at that. That is as nasty as you can get. And remember I told you, look, it's going to hit the top and it's going to come all the way to the bottom. Said and done. You saw it right here, guys. Look. Boom. Right there, and came all the way down to there. Done. Oh, let's see what's happening here. Caught the trade perfectly, and it's going down, 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 down. Right there. Let's see what else is happening here. You got another short right here. Remember, guys, that these are the AI powered algos. So these algos actually contain, a proprietary method for detecting certain anomalies in the market, news, and a bunch of other things that are pre-programmed into this. So for that reason, it didn't take you out right here. Look, a normal algo would have taken you out right here on this pullback, your stop loss, but this didn't. It sensed exactly what this was right here, just a bullshit reversal, and it's kept you in the trade. Whatever is happening right now with the Q&A and everything that he says, the market is having indigestion. The market does not like what the Fed said, and it's completely selling off. Look at this. Nasty. It's coming down, and it's coming down hard. Right there. Boom. Okay? Yeah, you see this, this was a bad signal right here on this strategy. It said to go long, and boom, finally the trigger kicked in and got you out of the trade right there. This was a loser right here. This got stopped out right here, and you had a stop loss right here, and this is going down right here, right now on this signal. So that's what you got right here right now. We'll come back to this in just a moment because I want to see what's going on right here. Wow, very nice going down. I'm going to get to my main algo, which is this one, and just watch it trade. I'll be back in a second, guys. I need to get some coffee. Alrighty, guys, I'm back. And wow, we are seeing a really nasty sell-off right now in the market. Awesome, man. Awesome. Awesome. That is great. That's great. How many points did you score today? Very nice. Very nice. That's almost, that's almost 100 points right there. Very, very good. Congrats on that. On any normal day, I would have taken this trade right here, this one or this one, except on Fed day. It's just not, I don't like trading volatility. That's just my style of trading, but that's, a personal preference to me. This filter here caught the trade early as well, right here, to the downside. Look at that, guys, right there. Super nice. Super nice. And that's still going down. Whatever Fed chair is saying right now, the market does not like. It does not like at all. Ha! Look at this. Boom. Comes down. Now it's going to go up. Interesting. So I am going to leave this, let's see, right here, because, well, this still has a long way to go, guys, to the downside. Just simply because this bar here, unless it crosses above the zero line plus one candle, it is still going to be short. And it seems like it's going to be short for a while. So I'll just leave this here because it's a nice clean view. Absolutely, you're welcome, trader. Ranger trader. I like that. Cool. Come back tomorrow when it's a regular day and experience the room then. But for now, I'm glad you came on board, and we look forward to having you tomorrow as well. All right, guys, you're seeing it right here. The Algo caught the morning trades, caught the afternoon trade, and completely smoothed, kept you in the trade despite this crazy spike right here. Okay. The Algo knew that this was just a bunch of noise, kept you in the trade, and now, you're on this short to the downside right there. Alrighty. See where we're at on the 5 minute right there. Wow, jeez. Amazing. I still see more downside in this. I am completely late to the trade right here on this, and obviously this is where we had the vast majority of chop with the Fed. Yeah. And he's still speaking right now in the background, which is why I have not done anything besides the fact that I'm already super late to the trade as well. Hey Winsu, how can we help you? Post your question. There's a lot of very experienced guys here who would be happy to share their wisdom. All right, he's still speaking, guys, and I'm just here watching the headlines. As I said before, I do not trade volatility. This signal happened just shortly before the announcement at 1:45 in the afternoon. Perfect signal right there. Look at that. 1:45 in the afternoon to get to the short on the downside to this right here. See you tomorrow, Ranger Trader. Enjoy your profits and have yourself a fantastic rest of the day. Wisnu, you can send a message on Discord. The link to the Discord group is on top. If you want to chat there, you can chat there. Wow, whatever Fed pal. Process of build-up, shrinking balance sheet, complicated. Yeah, I don't think the market's liking what Fed pal is saying right now. Wow, this thing is just completely selling off right here. Look at this, guys. Boom. All the way down. Same thing with this one right here. I am way late to this signal. Way late to the signal. And one of my rules is, if you're late to the party, stay out. I don't want to jump into this for a $500, $600 move. It's just not my style of trading. Another rule of mine is that I don't trade volatility. The market is way too volatile for me to jump in with the Fed speaking right now. So for that reason, I'm on the sidelines. It's one of the few times that I do not trade the market. And that's when the Fed speaks. And that's because I've learned my lesson in the past. But for you guys who are braver than I am, hey, you got the signal right there. Go at it. At your own risk. Wow, this is a massive move. Huge move to the downside. Look at this. Huge. No, they're not halted. Not at all. You can see them live right here on my screen. They're down about 65 points. Nope, I have no signal right now to take a buy right now. Oh, wow. Well, let me tell you something, Daniel, about TD Ameritrade. As much as I love them to trade options and stocks and those type of things, in the previous episode of really crazy market volatility, which was back, I think, in March of 2020, when you had the COVID scare and everything started to sell off, TD had a lot of issues with their platform, with the platform freezing up and traders not being able to execute trades and things just not flowing the way that they were supposed to with their platform. I remember they had that as a consistent issue for months, for many, many months. And they promised the moon and the stars that they would fix it. And so now that you're telling me that you're having problems, it could be a repeat of the same issue again. Oh, wow. That's crazy. Yeah. TD began having those issues on their platform when they were taken over by Schwab, and they I don't know what happened on their back end, but they started having a lot of issues since then. And it always seems that whenever there's any type of market volatility, the way you're seeing right now, their system freezes up. Orders don't get executed, and then you got traders that are very upset. Happens all the time. Well, it's been happening since March 2020 with them. Well, you can watch the Nasdaq trade live here on my screen. You will have some latency, though. There is a delay on YouTube of about, I don't know, 20 seconds, I think. So between the time that you see the signal, that I see the signal, and you see it, there's about a 20-second delay. That's the only issue with streaming on YouTube. Interesting, very interesting to see. Wow. That's one of the reasons I trade these futures on NinjaTrader or TradeStation. The TradeStation data feed is actually really, really good. I've never had any issues with what I hear other people having on Thinkorswim or other platforms, but yeah. Wow, this has been a huge sell-off right here, all the way down. Wow, this thing's just pushing. Wow. I'm interested to see if it's going to hit this this blue band, or if it's going to go right through the blue band and hit this bottom thresh floor right here. Yeah, wow, it seems like this is going to have a lot more down to go. 110 points down. Okay. Yeah, absolutely. Wow, that's fantastic, Daniel. That's a huge, huge winner. How many contracts were you trading? Yeah, it's the chart's still moving, and it's uninterrupted right now. Did you see the
It's
price?
going down.
Huh?
It's going down. Yeah.
It's going down, right?
Yeah.
Yeah.
Mm.
P&L.
Uh-huh.
What do you got? Yeah, it's definitely going down. Fed Pal is still speaking, still yapping away. Yeah, this is surf by analysis 14030. What level is that on your Fibonacci chart? I'm just curious to know. 14,494. That's where the trade was in. 14,494, and we are at 14,054. So this trade alone right here, this trade alone right here has so far, let me get rid of that, has so far clocked 440 points. All right, 440 points since this right here. Look at that. Boom, right there. Huge, 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 absolutely huge. Interesting. Okay. Wow, this bad boy is still gonna push down. But again, guys, I'm on the sidelines. I don't like trading volatility, and I do not like trading while the Federal Reserve Chairman is speaking. That's just my personal preference based on past experience. I'd rather just be on the sidelines today. But for you guys who have actually been brave enough to take this trade to the downside, hey, I applaud you. Congratulations. You guys have absolutely killed it today. It's just my personal preference and part of my trading rules of what I do. Market's not liking whatever the Fed chair is saying at this moment. Well, this here right here has picked up, excuse me, nearly 500 points to the downside. Oh boy. Yeah, if you're going to take a long, for sure, make sure it's on a paper account. Absolutely. Absolutely. Definitely do not take a long in a live account right now. That would be financial suicide. this short is not going to be over until this strategy takes you out with a buy signal at the bottom. Same thing with this right here. And keep in mind, guys, that these three strategies are all powered by AI in comparison to these four right here. These are four very distinct strategies right here. And yeah, but these are wired completely different. Oh, wow. Let's trade in a tight little channel. All right, it's 3:23 in the afternoon. I normally end this session at 3:30, but for the benefit of watching where this actually gives you the exit signal, I am just going to let this bad boy run until you get the exit signal here. Just to illustrate where this gives you the exit signal. All right, so I'm going to let it run a little past 3:30 today, and we'll just watch this together. Wow. Amazing. Huh. Amazing. Huge move, no doubt. And there it goes. If you guys are new to the channel, please don't forget to like and subscribe to the channel. That's the only way to know when I come back, when I'm live every day, 12:30 Eastern Time to 3:30 in the afternoon. I normally end the session at 3:30, but today I'm going to let it run a little more like I did yesterday, just in case you guys are interested in watching to see where this is actually going to plot the exit signal right there. That one and this one as well. Right there, those two. I'll just blow this bad boy up right here for you to see. Yeah, absolutely. Today, was one of those days where the market either loves the Fed or hates the Fed. And obviously the market right now is not liking the Fed. And whatever he's still yapping about, he's still in the Q&A session right now, speaking with various reporters. I can see it on my Bloomberg screen. Absolutely. It's a very, very profitable market to trade. Excellent market to trade. That's the reason this is the only market I trade. This is the only thing I trade. The Nasdaq 100. Every time I speak to someone, you know, whether it's at the gym or a dinner party, and you know, people always ask, "Hey, what do you do for a living?" You know, you say, "Yeah, well, I day trade the Nasdaq 100." They always look at you and ask, "Well, what else do you trade? Do you trade the ES, crude oil, or you know, the Russell?" And I'm like, "No, I just trade the Nasdaq." People just give me this perplexed looks, you know, look on their face like, "Why aren't you taking advantage of all these other instruments?" It's because you know, guys, at the end of the day, you could be jack of all trades and master of none and not really make money. But in this industry, if you focus your attention on a specific product and get really good at it, you'll make a lot of money. So this is all I trade, the Nasdaq 100. It's a very interesting contract to trade, for sure. Well, welcome to the group, Daniel. We're glad to have you here, and we look forward to your contribution in the group. I'm sure other traders can learn from you as well. Every one of you guys has a unique approach to trading. No two approaches are the same. I'm very systematic in how I approach. I've got a strict set of rules that I follow, one of which is I just don't trade on Fed day. That's just my way of trading. But there are guys here in the room who made very good money today taking risk, trading the Fed announcement. But every one of you guys has a very good approach to trading, which has made you who you are today. And I welcome you guys sharing what you do in the group. There are a lot of new traders in the group, as well as a lot of experienced traders in the group. And we're all here to collaborate and share ideas to improve your system and approach to trading. That's the whole reason we're here. Trading is a lonely sport, and we're here to support each other and, more importantly, make money, right? All right, the news conference with the Fed is officially over. So that level that you were talking about earlier, I think it was 14 something. That's at the 12.5 Fibonacci level. Interesting. Yeah, very interesting to see that. We just got new bar change. Nothing here yet on this bad boy. Nothing here yet. Ah, we're in that zone right here. Look. The candle perked its head up right about a little above 410, and then it just, boom, completely came down right there. You guys need to keep an eye on the COT report, which comes out tomorrow evening. That's a very important report, and if you don't know about it, just go ahead and Google COT Net Position Report Futures, and that'll give you some color on exactly what it is, how to read it, and how to access it if you don't actually have this study. This is a TradeStation study that's really useful, that actually pulls the report and plots it on the chart right here. It comes out every Thursday night. So I'm waiting for this to break below 13,706. 13,706 is the floor, and it actually hit that a couple of days ago right there. Boom. Then it bounced up. Another fantastic day in the futures market for those of you who trade risk on Fed Day. It's been a grand slam for some of you guys. But you guys have also now seen how the algo performs on Fed Day too. That's another important thing to note here. The AI algos right here, boom, perfectly caught the trade to the downside. Right here, look. Since 145. I mean, it doesn't get better than this, guys, right here, all right? Yeah, right? You know, at the end of the day, it really boils down to your personal risk profile and what you like in terms of your risk structure. And Fed Day is just one of those days where it's really unpredictable. Sometimes, hey, the market will go up. Other times, look, things just sold off hard. But it's just outside of my risk profile and how I trade. But is there money to be made on Fed Day? Oh, hell yeah. Well, yesterday in the after hours, remember what happened. Here's the after hours yesterday until I think about 5 o'clock. And the market just sold off, and came all the way down. And I think, yeah, it was just nasty. I saw it yesterday for a moment after the closing bell, and because the closing bell was about right here. This is where the futures market closed, and then from here, from this point, it just sold off another 3 bars, and I was like, holy moly, look at that. All right, just so you guys know, this strategy right here, this one right here, this is going to be signaling a closing candle in about 5 minutes, give or take. That's just the way I have it programmed. At 3:45 Eastern Time, it completely takes me out of the trade. This one here will keep you in the trade all the way through the closing bell. All right? So if you want to take your signal from here, you'll see it right now in just a moment. That's interesting. What information do you have on your side that leads you to believe the market's going to slinky up? I'm just curious.
Alright guys, so we are about to close the day. Passed by a few minutes already because I'm very attempted here on my shorts. So I'm gonna go quickly for you guys to see each one, okay? And make sure you guys give a thumbs up, subscribe, and I see you guys tomorrow. Alright? Have a good night.
Yeah, you're talking about this candle right here, give or take. Now this is the 1430. The 1430 candle was right here. Yeah. Yeah, that looked like a bullish candle, like it was going to go up, and then it did an about face and boom, went down. This is right around the time Fed Powell started to speak. Ah, okay, I see. Got it. Got it. Yeah, as I've said before, guys, each of you has their own very unique strategy to trading the Nasdaq 100 that I'm sure you've developed over time. That has shown some, measure of promise to trade this instrument. And that's what makes trading so unique. You know, there are different approaches out there that work for different people. I personally like to take my signals when they come, but that's just me, and that's just my own approach. But there's a lot of very good approaches, just like Daniel outlined right now. He's got a very unique approach to how he trades the Nasdaq. All right, this is going to close at the next candle, and it's going to be done. Yeah, Ansel draws a tunnel, and it works for him. And he's made like several hundred points on certain trades, and he's been very successful. He's got a very simple approach, but it works for him. All right, 2 more minutes to go, and we get bar change. Alrighty, and this bar is just about to close right now. 10, 9, 7, 6, 5, 4, 3, 2, 1. Boom, there you go, guys. Right there, you got the signal to cover that short on this strategy. And that's only because this is programmed to take me out of the trade at 3:45 in the afternoon, regardless if there's more downside or anything in the market. That's just the way this is programmed to trade. This one here, however, this bad boy is going to take us all the way to the close in another 15 minutes. Yeah, the market does not like whatever Fed Chair Powell is saying. We know as consumers that inflation is high. Gas prices are high. The Biden administration has chosen to protect Ukraine's borders instead of our own borders. I mean, there's a lot of stuff wrong in our economy here in America, guys. And I think the market just read right through his bullshit and didn't like it. End of story. Can you give me some water? Thanks. Exactly. You got to know how the instrument moves, and it takes a long time to develop the discipline to trade certain instruments in the market. You got to be fully immersed, fully immersed at what you do. I remember a long time ago, I was working for a firm, for a big commercial real estate firm, and this is 20 plus years ago, and the managing director who was training me said, look, in the field of commercial real estate, you have a lot of generalists, but the guys who really make the money are the specialists. Just like if you go see a doctor, who do you think makes more money? The generalist, the general practitioner, or the specialist? And I said, the specialist. He says, yeah, exactly. The same applies in this profession. You got to be a specialist at what you do. And there's a lot of professions like that out there where if you become a specialist, you do very well. Hey, this is no different, guys, right here. If you specialize in a specific instrument and get really good at understanding how it moves and how it trades, that's really how you make a whole bunch of money. And then if you design algorithms like this, and that's a whole nother level right there. So yeah, absolutely. There's absolutely no intrinsic value in cryptocurrency at all. And some people just have a hard time understanding what intrinsic value is. But there you go. Cool, man. Thanks for subscribing, Daniel. Absolutely, man. You got to follow your rules, and the rules that you've designed, work really good for you and the product instruments you trade. I tend to come in the morning session after 9:45. I prefer letting the market shake out in the first 15 minutes of action, and then deciding whether I want to take a trade or not. It's just a little too noisy for me in the morning. But again, that's just based on my personal risk profile and how I trade. Everybody's different. I know traders who trade strategies that trade the pre-market. They love trading the pre-market, and by 9:30 in the morning, right before the bell, those guys are completely out of their trades, and some of them do very, very well. Some guys just trade the open. Some guys just trade the closing, the last half hour of the day. There's a specific algo that happens to trade often, a lot, almost daily on the Nasdaq, if you've noticed it, in the last 10 minutes of the day. And that's something completely unique into itself. The reason that happens, of course, is because margin requirements for most traders increase after 3:45 in the afternoon. So whoever is trading that algo knows that, but that's also their specific niche right there. So it's interesting to see how many different approaches there are to trading the same instrument, and how people approach their trading to the same. It's always enlightening to hear different angles of how people trade this. All right, guys, we've got about 9 more minutes to the closing bell, and this is going to take you out right at the closing bell. It's been a very profitable day for some of you, and I applaud you. You guys have done a fantastic job and have outdone yourselves on this day, this crazy volatile day. I do encourage you guys to post your winners on the Daily Winners channel in the Discord group. We'd love to support your success. Looks like it's one more push down, right? Before the close. Oh, interesting. Interesting. So this has been short since 14,494. I wrote it down on a little piece of paper. 14,494. That's where this short came in at 1:45 in the afternoon. And now we're at 14,1. Well, it's moving so fast. 14,155. That's 339 points. That's where we're at right now. Huge, huge, huge move to the downside. All right, tomorrow's going to be another fantastic day in the market, guys, and it's a regular day, so I'll be trading again tomorrow. This absolutely left me salivating today with a lot of desire to want to jump into the trade, but I have to stick to my rules and knowing who I am as a trader and understanding my risk profile. That's just the way I trade on Fed days. I step aside. We got 4 more minutes. We get the bell, a closing signal, and we are done for the day. So bottom line, guys, we're not making progress on inflation. I personally think that real rates should move higher on this kind of posturing from the Fed, but that's just my opinion. I also don't like walking into my grocery store and seeing empty shelves, which is pretty common in my neighborhood. All right, we're in the final minute of the day. Congrats to all the viewers who actually made money in today's very volatile afternoon session. I'll be back tomorrow at 12:30 for another round of live trading. I'm going to keep this open just so you guys can see the exit signal on this right now. And boom, there you go. Done, guys. That's it. The end right there. Hope you guys had a fantastic trading session, and we will see each other tomorrow again. Same time, 12:30 Eastern Standard Time. Until then, take care and happy trading.